of the profit to 20% of the profit, 30%, 80%. So it is decided over there. And then the two more accounts that belongs to stockholders' equity, they are revenues and expenses. So recall your discussion regarding retained earning. So this year or current retained earning, current year retained earning or present year retained earning is net income minus dividend. So if you just segregate net income calculated revenue minus expenses. So indirectly, so revenue also belong to retained earnings. Expenses also belongs to retained earnings indirectly, right? So, and retained earnings is a part of owner's equity. So all the revenues, all the expenses also belong to retained earnings, or you can say that stockholder equity. So let me just clear all the mess here. So revenue means increase in equity from delivering goods or services. So selling your products, which is the core, business of core operation of your business. So that is called revenue or sales. If you are selling your furnitures, your chairs, you can be in furniture business, but the main part is that your core business, for example, your core business is for example selling computers, and you are selling your old furniture. So that is not sales. Remember that one, right? That is not sales. Sales are the purpose of your establishment as a business. You opened the business. The purpose was to sell computers, not the chairs, right? So that is not your revenue. Expenses. So to maintain or to increase all the expenses that are basically running the operation of the business, right? For example, paying the rent, paying for utility bills, paying for raw materials, paying to suppliers, paying to the salaries of the workers, right? These kind of spendings, they are called expenses. Now stop and think about this. So please read that one and tell me the answer. So name two things that increase. We have a company name, Whole Food Market Incorporation, stockholders equity. Two things. And let me write out the equation. Assets is equal to liabilities plus owners equity. So name two things that increase Whole Food Market Incorporation equity. Anyone?
So less liability should increase, or more asset, I would say.
I'm just talking about owner's equity, not liability.
What can increase owner equity? If I have more asset, I will have more owner equity. If I have less liability.
Name two things.
More stock. Like if stockholders put more money in.
Well done. So you can answer it through segregating the owner's equity. So owner's equity consists of
common stock and retained earnings.
Common stock plus retained earning. Sorry about my writing here. This is common stock, CS. And then the retained earning also include revenue and expenses. Right, guys? So you can just name two. One, you can also increase the owner's equity through issuance of shares, right? The others. Anis?
Others are revenues and expenses.
So if we sell more, we can increase owner's equity, right? If we increase revenue.
Revenue.
So how revenue increase going to increase the retained earning?
Sorry?
How increase in revenue can affect increase in owner equity?
Well, because owner equity is made up of, as we just said, common stock and retained earnings is made up of revenue and expenses. Since revenue is positive addition to what we have, it increases our retained earnings. So that increases also our owner's equity.
When revenue increases, so revenue minus expense, it means net income increases, right? Net income directly added to retained earning. So when retained earning increases, owner's equity increases. So there can be others as well, like you decreasing your expenses, you increase your owner equity, you float your shares to the market, you increase the owner equity, right? Or expenses, you can different kind of, you pay less utility bills, less salaries, they also increase owner's equity. Well done, guys. What about the one who decreases the stockholders equity? If you increase expenses, right? So now the opposite one. The opposite one are,
Sir, can you repeat? You say if you increase expenses or you say if you decrease expenses?
which one?
No, the sentence that you just say right now at the like 1 second
Okay.
ago.
So the things that decreases the owner's equity is increase in the expenses. If expenses increase, it means in net income go down, right? When net income go
Right.
down, so net income is directly added to retained earning goes down, and then owner's equity go down, right? Or if you reap or you buy back your shares from the market, so your common stock decreases, right? Or if you sell less, right? So this kind of stuff decreases your owner's equity. So sale of stock, right? And increase in net income. Well done. Second one, decrease in equity. If you pay more dividend, then also it decreases the owner's equity, right? Because distribution from the profit as a dividend form decreases the retained earning, and retained earning decrease mean owner's equity decrease. Well done. Now here comes the real, stuff, the core agenda of this class. That is, show the impact of business transactions on accounting equation. Let's talk about this. So this is exactly the, the explanation of the assignment. Let's talk about this. So in order to understand the impact of business transaction on accounting equation, so we have your book example, and that is Freddy's Auto Service Incorporation, right? So let's assume Freddy Kish opened Freddy's Auto Service Incorporation. Remember, this is the owner and who opened this company, and this is the name of the company. And name of the company can be your name as well, right? So don't get confused with this, why we have two Freddy's, right? So Freddy's Kish is the owner name and company name is Freddy's Auto Service Incorporation, right? So let's talk about this. So what is transaction number one? We know that assets is equal to liabilities plus owner's equity, right? And we have, write it down in the common asset accounts, liability accounts, and owner's equity account, right? Now, what happened here? Let me drag the controls downward. Here we go. So on April 1st, Frederick Rich and a few friends invested $50,000 to open Freddy's Auto Service Incorporation in return for a common stock. So remember, there are two sides of a transaction, giving side and receipt side. You have to think in terms of your business, not in terms of its owner. You don't think in terms of Freddie Krish, think in terms of company. Freddie Auto Service Incorporation. So this is the equation for Freddie Auto Service Incorporation, not for Freddie Krish. Okay. So business assets is equal to liabilities plus owner's equity. There is like, it is implied that there is equal sign here. So 50,000 is invested in the business, right? So tell me, this is a 50,000 cash or customer or supplies or land?
I will, if it's invest, I will say is in cash and it's
In terms of business, then you are thinking in terms of the owner or investors. Think in terms of business. If you are a business, somebody gave you money, right? It means cash is injected to you. So cash is going to increase. 50,000. Equation is balance? No. You see here, 50,000 here.
yes, we see.
So remember, the return is common stock. It means asset side is that cash is increased, and on the other hand, company increases common stock, right? Companies issued common stock to the owners. So it means owners receive shares. Equation is balanced. Guys, understand?
Yes.
Okay, so answer would be, since it's transaction 1, so you write it down transaction 1 here. Now the second transaction. So second transaction is Freddy's purchases. So this is basically, yeah, Freddy's purchases land for a new location and pays cash for 1,000. Now what happened here? What are the two sides of transaction, giving and receiving? So you pay cash, that is your given side or receipt side?
Giving?
Exactly. You pay cash, it means cash is going out from the business. Cash is going out from the business. How much? 40,000. And what did you get in return? Land. So land increases